Okay, let's do a question on profit maximization. This time I've taken a question from the BPP book. It says MOC makes and sell copyrighted executive games for two distinct markets. So there are two markets now in which it has monopoly. The fixed cost of production per month is 20,000. So we have the fixed cost here. Variable cost per unit produced and sold are 40. So we have the variable cost. Monthly sales can be thought of X, where X is equal to X1 plus X2, right? With X1 and X2 denoting monthly sales in their respective markets. So this is the sale from one market and this is the sale from the other market. Remember, we have two markets. Detailed market research has revealed the demand function in the market to be as follows. So we are given the demand function. Remember, we actually wrote it like this, right? But instead of Q, sometimes it can be written like this also, X, okay? So this is A, 55 and 200 for one and the second market. And this is B, 0.05 and zero point 0.2 for the first and the second market. Management accountant believes that there should be price discrimination. The price currently is 50 per game in either market, right? So currently the price is 50 for both the markets, but the management accountant believes that we should have different prices, price discrimination for both the markets. We should have different prices. Okay. Analysis of the information of executive game and the given management accountant believed to do the following. Okay. Um, calculate the price to charge in each market and the quantity to produce in each month. So there are two requirements. We have to find the price and the quantity to maximize profit. Now remember the three steps that we were following. Step number one, to find the demand equation. Step number two, to find the quantity which will maximize the profit. Step number three was to find the price which will maximize the profit, right? These are the three steps that we'll be following. The first step is actually done for us all over here, right? But just for the sake of completion, we are going to do it once again. Let's ignore the second two parts. Let's do the first one first of all. So part A, I'll say we have two markets. So I'll say M1 on the left-hand side and M2 on the right-hand side to show the second market. So these are the two markets that we have. Okay. Now step one, P is equal to A minus BX. P is equal to A minus BX, right? P is equal to A, which is given to us 55 minus B, which is given to us 0.05x. Similarly, P is equal to 200 minus 0.2x. So that's what we are given already, but we have written it down once again. Step number two. In exam, you don't have to write it again if it is already given to you. Okay. Now, step number two was to find the quantity which will maximize the profit, the quantity which will maximize the profit. Remember, for that, we have to equate marginal revenue and marginal cost. Now, marginal cost is your variable cost given to you 40, and marginal revenue is A minus 2BX. Right? So marginal revenue will be equal to A minus 2VX. Okay. Now A, which is 55 given to us, minus 2 multiplied by B, which is 0.05 multiplied by X is equal to 40. And A minus 2 multiplied by B, which is 0.2 multiplied by X is equal to 40. Now, 55 will move to the other side of the equation, so that will be 40 minus 55, so which will be minus 15, right? Okay, before that we need to multiply this also, 0.05 multiplied by 2 which is 0.1. Okay, that's 55 minus 0.1. Let's do it in steps. 0.1x is equal to 40. Okay, now 40 minus 55 will be minus 15 divided by 0.1, which is minus 0.1, but minus minus will be cancelled, so that will be x will be equal to 150. And similarly on the other side it will be 2 multiplied by 0.2, which is 0.4. So this will be 0.4, right? A, remember, is given to us already, so we can write it here 200, right? So this is 0.4. 40 minus 200 divided by 0.4, which will be 400 units. Now this basically means that in order to maximize the profit, we should make and sell 150 units in market 1, and we should make and sell 400 units in market 2, right? Now step number 3 was to use the demand equation once again and use this quantity, and this will give you the price, which will maximize our profit. So P is equal to A minus BX. Once again, P is equal to A, which is 55, minus B, which is 0.05, multiplied by X, which is 150. P is equal to A, which is 200, minus B, which is 0.2, multiplied by X, which is 400. So price will be 150 multiplied by 0.05. So 7.555 minus 7.5, so that will be 47.5. So the price in the first market should be 47.5, and in the second market it should be 400 multiplied by 0.2 is 80. 200 minus 80 will be 120. So price in the second market should be 120. So now we can see that we were selling it for a single price of $50 per the game, right? But we can see that we should actually sell it slightly cheaper in the first market and expensive in the second market. And this will increase our profit. Okay. So that was the first part. Calculate the price to charge in each of the market and the quantity to produce and sell in each of the markets. So the quantity is here 150 and 400, and the price is here 47 and 120, 47.5 and 120. Let's see the second requirement. Determine the revenue function for each market and maximum monthly profit. Okay. Now, the revenue function, that's quite straightforward, which is price multiplied by the number of units. So price per unit multiplied by the number of units will give you the total revenue. And the profit, of course, will be the revenue minus the cost, right? So we'll first calculate the total revenue, then we'll calculate the cost, and this will give us the profit. Okay, so let's do it together. So part B, let me do it in blue this time. So the price and the revenue is quite straightforward. You see, we have the quantity and the price, we have the quantity and the price, right? So in market 1, revenue will be 150 plus 47.5. And in the second market, it's 120, sorry, 150 multiplied by 47.5 and 120 multiplied by 400. So the revenue will be, and 20 multiplied by 400, which is 48,000. And over here, 950 multiplied by 47.5, which is 7125. Right? So we have the revenue in from both the markets. Let's see the question once again, right? Now, if you see the cost will remain the same, right? How do you find out the cost? You see, the total cost is equal to fixed cost plus variable cost per unit multiplied by the number of units. Now, we are given the fixed cost 20,000, variable cost per unit is 40. We simply have to multiply with the number of units, and you can see that the number of units is basically the quantity, right? Which is here in the second step, 150 and 400, which when you combine it together, that will be 550, okay? So we have the revenue, so let's calculate the total revenue first of all. The total revenue will be 48,000 plus 7125, which will be 55,125. The total cost, which is fixed cost plus variable cost per unit multiplied by the number of units. Number of units, remember, is 150, 150 plus 400, which is 550 units. So the total cost will be 40 multiplied by 550 plus 20,000, which is 42,000. So the profit will be 55,125 minus the cost, which is 13,125. Right? So we have the total profit, right? So this is going to be our maximum profit that we are going to have. Maximum profit. Let's call it maximum profit. Okay. So the second requirement, let's see once again if you have missed anything, determine the revenue function. So the revenue function is done for each of the market, and maximum monthly profit, that's also calculated. Okay. Now let's see the last requirement. Calculate and comment on the change in the total profitability. Change in the total profitability. Now you see, if you have to calculate the change, it means that you should know the current profit, and you should know the new maximum profit, and you should see the difference. The change will be the difference of the new and the existing profit. The new profit, remember, is the maximum profit. Okay. So let's calculate our existing profit now, and then we'll see the difference of existing profit and the maximum profit. Okay. So part C, right? Current profit. Now, the current profit will be, first of all, the current revenue. Let me again say market 1 and market 2, right? Because the revenue of both the markets are different, right? So P is equal to A minus BX. This is the demand equation, remember. The current price, as per the question, is $50. So it will be $50 A is 55, B is 0.05x. Similarly, for the second market, the price is the same, 50, A is 200 minus B is 0.2 and X. So this will give us the quantity, right? So 55 move to the other side of the equation. So that will be 50 minus 55 divided by 0.05, which will be 100 units in market one. That's what we are selling in market one. And in the second market, that will be 50 minus 200, which will be 150 divided by 0.2. Remember, the minus minus will be cancelled. So I've just ignored it. 750 units. So how many total units are we selling? The total units that we are selling is 850 units. Remember, currently we are selling 850 units. Now this will help us to find out the total revenue. Then we'll deduct the total cost, and this will give us the current profit. Okay, so revenue units multiplied by the price per unit, which is 50. So the revenue will be 850 multiplied by 50, which is 42,500. This is the total revenue. The current total cost is again fixed cost, which is 20,000 plus variable cost per unit, which is 40, multiplied by the number of units this time is 850 units. Which is 54,000. Well, rather than having a profit, we currently have a loss actually. 42,500 minus the cost will be a loss of 11,500. Right? We'll have a loss of 11,500. Now, the current profit, if we actually follow this, the price discrimination, if we charge different prices, will be 13,125, and our existing profit is not actually a profit, it's actually a loss, is 11,500. Now this will actually help you with the comment, which is the second part of the same question. You see, you have done the calculation and comment on the change in the total profitability and the prices. Okay, so your comment will be that if you follow the beliefs of the management accountant that we should charge different prices rather than 50 for both the markets, we are going to have uh, more profit rather than having a loss, right? So that will be your comment. Okay, remember, you should never ignore the comments, right? So always it's better to break down the questions into pieces and then solve it. Okay, I hope it was helpful. Thank you very much.